Well, welcome to our final West End Recovery Live session. The series was developed to celebrate the strength, sustainability, resilience and the future of the West End, bringing together businesses and employees throughout the pandemic. Over the past 2 years, we've had a series of inspiring speakers who provided stimulating and engaging information and ideas. We've aimed to keep you informed about the trends and the policies that will help shape the future of the West End. Speaking of the future, we're delighted to be joined by the Colliers team in this final session to share with you our latest West End retail turnover forecast. We'll be joined by Paddy Gamble, Director, Head of Retail Strategy and Analytics at Colliers, and he'll be taking a deep dive into the data-driven insights, which will provide you with a view of retail and leisure sales over the next decade. There'll be an opportunity, of course, to ask questions to our speakers today at the end of the session, so do please enter any questions that you have in that chat box on the screen. You know how to do it by now, I'm sure. But first, let's kick off with New West End Company's Chief Operating Officer, Dee Causey, for an update. Dee.
Good morning, everyone. As Martin has introduced, and I'm sure many of you know by now, I'm Dee Causey, Chief Operating Officer at New West End Company. I'm delighted that we have launched our West End retail turnover forecast in partnership with the Colliers Retail Strategy and Analytics team, with Paddy Gamble joining us today to provide a real in-depth look at the report and its findings. The findings of the report truly are a reflection of our district's resilience, and we hope that it will instil confidence in the future of London's West End as the most diverse, sustainable and inspiring place to visit and do business. I and the rest of the New West End Company team look forward to working with you, our members, as we strive together towards this epic recovery, welcoming back our customers, businesses and investment to our district. We have 5 key priorities for the year ahead that I would like to share with you today. Number 1, the Oxford Street District transformation. With 5 billion of investment coming into our district, we will continue to support with our partners, Westminster City Council's 150 million transformation of the nation's high street. Number 2, the Elizabeth line. It's coming. We will continue to work with Transport for London to ensure that the Elizabeth line is opened in the first half of 2022, so that our district can start to reap the benefits of the 18 billion infrastructure investment as we continue our recovery. Number 3, continue to attract global and local customers, businesses and investors. We will lead on and support key campaigns to attract back customers and promote London's West End on the world stage to ensure that we retain our global city status and attract new, diverse and sustainable businesses to the area. Number 4, of course, business rates. With CBI and partners, we continue to campaign the government for fundamental reform of business rates with a fair evaluation this year that truly reflects the reality of the West End economy. And finally, number 5, a sustainable district. We will continue to work with partners on our zero emission transport zone ambitions with the launch of our Sustainability Action Plan in April. So enough from me. I am now delighted to be handing it over to Paddy Gamble, Director of Retail Strategy and Analytics with the Colliers team. Paddy, over to you.
I'm just looking at the screen that I have in front of me, and that has the impression that Paddy has dropped off the call for some reason.
I'm sorry, I'm here.
He's there.
Thank you,
there.
Sorry.
Because I couldn't see you and we couldn't hear you, but you are there. That is a relief to know.
Panic over.
So over to you, Paddy.
Thank you. So, and thank you, Dee. For those that don't know me, I'm Paddy Gamble. I co-lead the Retail Strategy and Analytics business line within Colliers, having recently joined the business in October last year from Accenture, where I co-led the Javelin Group Locations and Analytics practice with my colleague Paul Matthews, who is now also co-leading the Colliers team alongside myself. Next slide, please. So what were we asked to do? So New West End Company commissioned Colliers to provide an understanding of current performance trends across London's West End and to provide a forward-looking data-driven view on performance over the next 10 years. A number of key data points were analysed and put together to answer this question. Transaction data from MasterCard allowed us to understand spending behaviours across the component parts of the West End by merchant category and by consumer type and origin. Mobility data blended with consumer profiling provided a really granular view of footfall across the West End streets and helped us analyse how the recovery differed by residents, workers and wider domestic or international visitors. On top of this, and to start looking to the future, we then overlaid wider economic, population and tourism projections relating to both London and the wider UK economy. Next slide, please. Analysis and reporting zones were defined for key trading areas, and as we step through the presentation, you'll see that we aggregate our analysis and forecasts to these key geographic areas. Next slide, please. And also by key trading streets. Whether it be by analysis zone or trading street, we have built up our view on sales based upon the current occupier and product category space mix present in 2021 across each of these zones. Next slide, please. So let's first rewind to 2019 and look at the evolution of both sales performance and footfall from that point onwards. Blending MasterCard data with Colliers mobility-based footfall data provided us with an in-depth understanding of performance across the West End and really demonstrates the relationship between footfall and spend, whilst also highlighting the impact and then recovery as a result of the pandemic. As you will see, spending levels in the West End have largely tracked footfall performance. However, you'll also see that from around May 2021 onwards, what we saw was that recovery in spend was outperforming recovery in footfall, i.e. those consumers coming into the West End appeared to be much more likely to transact, or that average transaction values were much higher than previously. This variation in footfall recovery versus spending recovery was most likely a result of releasing pent-up consumer expenditure built up during the various phases of the pandemic versus consumers coming back into the West End once or twice a week, as opposed to the previous 4 or 5 times a week pre-pandemic. Next slide, please. More granular analysis of the mobility data allows us to explore how COVID impact and then recovery differs by each consumer type or underlying component of the footfall. We saw resident footfall back in line with pre-COVID baseline level by October, but this dipped in the final months of 2021 and particularly in the final few weeks of December as the Omicron variant emerged. Domestic and worker footfall levels reached around 30 to 40% below pre-COVID baseline by October 2021, with worker footfall declining significantly in December as a result of Plan B restrictions. International footfall did see some limited recovery up to around October, but was still 90% of pre-COVID baseline by the end of 2021. So why is it important to look at footfall in this more granular way? Because it's the component parts that make up an area's footfall that will dictate the speed of recovery for that specific area, street or retailer. For example, understandably, areas or retailers more reliant on international visitors will have been and will continue to be the slowest to recover. Next slide, please. So moving from footfall to sales and the MasterCard data, the chart really highlights the differing rates of recovery for the second half of 2021 at the key trading street level, whilst also highlighting the impact on monthly sales performance as we move through the various stages of the pandemic. For example, in December, Oxford Street East was back at pre-COVID levels of performance, whilst Bond Street was still around 30% below pre-COVID levels. Next slide, please. So what does that mean for overall 2021 annual performance? For the core West End area, we forecast total sales around 4.9 billion, which was 30% growth versus 2020, but around 46% below pre-pandemic 2019 levels. However, as mentioned on the previous slide, the mix of shopper groups and origin of footfall across the differing trading zones meant that recovery was not equal across all parts of the West End during 2021. Those areas with greater proportions of local shoppers, domestic visitors and workers, such as the Oxford Street district, have had the strongest recovery and sat at around sort of 24 to 28% below 2019 levels on an annualised basis. Whilst those areas with much greater reliance on tourists and international visitors, such as Regent Street, Bond Street and Mayfair, have understandably had weaker recovery and were around 59 to 73% below 2019 levels. Next slide, please. So now moving on to, well, what about category level performance? The MasterCard data allowed us to look at merchant category performance by area, and what we saw was health and beauty being the strongest performing category. This was most likely driven by the health element of the category, plus the fact that a large number of operators fell within the essential retail category, and so were not as impacted by lost trading days as a result of trading restrictions. Despite a number of closures in the category, we also saw department stores perform well, most likely driven by the destination element or unique offering that some of these operators provided, coupled with the higher propensity to spend when visiting that we mentioned a few slides earlier. The weakest performing category was clothing and accessories. Overall, consumers were generally much less reliant on this category, but across the West End, the performance within the category would have had a high degree of variance. Those occupiers located in areas more reliant on that international visitor, likely performing well below the category average, whilst regardless of location within the West End, those operators with a strong online offering are likely to have seen sales diverted to their online businesses and thus impacting store level performance and transactions. Next slide, please. So now moving on to our forward-looking view for the West End. From a data perspective, we've looked at 6 key influencers or drivers of future West End performance. These drivers will typically impact either the volume of footfall or the level of expenditure in the West End. From an economic perspective, the UK and London are expected to recover to pre-pandemic levels during 2022 and grow by a further 13% up to 2025. Tourism. The pandemic had a massive impact on international footfall across the West End. Future tourist footfall and expenditure estimates account for international visitor numbers recovering by around 2023 and then continued growth up to 2031. Crossrail. Crossrail will boost accessibility to the West End, both to shoppers, workers and domestic tourists. And we've built in a positive uplift from around mid-2022 onwards to account for the phased opening of Crossrail. Population growth. Our future footfall projections account for residential, catchment and worker population growth of around 3 to 6%, depending if you're looking UK-wide or London-specific. Expenditure growth. Our future transaction and expenditure projections account for consumer expenditure growth of around 20% or 24% up to 2031, again, depending if you're looking at a London consumer or a wider UK domestic consumer. Whilst these are all positive drivers of future West End performance, we also recognise that the ongoing expenditure shift to digital channels will limit growth up to 2031. And we have factored in the continued online growth rates by product category up to 2031 in our projections. Next slide, please. In terms of these performance drivers, we've then flexed these across a range of scenarios when forecasting West End sales. For our prudent scenario, we flexed our modelling to factor in lower economic growth projections, greatest projected shift to online spending, changing working patterns that meant lower total number of daily office workers as a result of hybrid working, for example. whilst our optimistic scenario saw us apply higher economic growth projections, limited online impact and limited longer-term change in working patterns. Both scenarios assumed international visitor numbers recovering by around 2023, and both scenarios benefited from the positive impact of Crossrail starting to open midway through 2022. Whilst our midpoint scenario is essentially a blended average of the above scenarios. Next slide, please. So what does this mean for the future West End sales? Here, the chart focuses on our midpoint scenario, where we forecast sales to exceed 10 billion by 2024 and be around 10.4 billion by 2025. This equates to around a 14% growth versus pre-pandemic levels. Under our most optimistic scenario, this would be around 11 billion by 2025. On the chart, you'll see how we've split out the sales by origin or consumer type. This shows that across the West End, UK domestic spend is the largest contributor. However, you'll also see the importance of the international spend, particularly as we move beyond 2025 and where this expenditure continues to grow, whilst we see slight reduction in domestic spend as a result of that continued shift to digital channels, eroding store-based transactions. Next slide, please. If we look below the headline West End numbers and look to how the forecast recovery is driven by origin of spend, UK generated sales, whether that be resident, worker or wider domestic spend, are forecast to exceed 2019 levels by 2023. Whilst overseas generated sales forecast to recover at a much slower rate and not anticipated to exceed 2019 levels until 2024. Again, this obviously means that for a specific area or street, the rate of recovery is ultimately dictated by the mix and origin of footfall, which we can see on the next slide, please. Whilst we have forecast West End sales to be 15% above 2019 levels by 2031 on average under our midpoint scenario, or 28% under the more optimistic scenario, longer term growth rates will differ dramatically by trading zone based upon that shopper mix or origin of shopper that we just mentioned. At the top end of this chart, you can see that we forecast areas such as the Oxford Street District streets are anticipated to experience much stronger, quicker recovery and growth due to less reliance on international visitors, and so we will be well above the West End average growth rates. While some of the more aspirational areas such as Regent Street, Bond Street and Mayfair, areas that capture significant amounts of international spend, will likely experience slower growth, particularly up to 23-24, and so a couple of years behind in terms of their recovery, and so will be below that 15% average by the end of 2031. Next slide, please. Finally, we look at the range of forecasts across our scenarios. As a reminder, our prudent scenario accounted for lower economic growth projections, greatest projected shift to online spending, changes in office-based working patterns that meant lower total numbers of daily office workers. Under this scenario, we were looking at sales around 8.8 billion by 2031, whilst under our most optimistic scenario, which accounted for higher economic growth projections, that more limited online impact, limited changes in longer term working patterns, we forecast that at around 11.6 billion by 2031. Thank you.
Paddy, thank you very much indeed for that. Time now for some questions and hopefully some answers as well. We've got one already from Hannah Gillespie, and she is asking if the presentation slides are available for the viewers today to access separately. I know that the webinar is normally published, and so you'd be able to see the slides there, but maybe Dee, you can confirm whether you provide them separately as well. Is that right?
For sure. So the good news is, for any members frantically scribbling down numbers through Paddy's presentation, the full report is available for all members through our website. So if you go on there and log in, you'll be able to access Paddy's report. So good news for anyone, as I say, frantically writing down various scenarios in their notebooks this morning.
Okay, thank you for that. Let's go to some other questions, and just remember, if you want to put a question, you just need to go to the chat box, type it in, and then providing it's a reasonable question, we'll put it to both of the panelists. Lucy is asking, how do you think the lack of tax-free shopping will impact this? Do the international numbers take into account, if not reinstate over the next few years for UK tourist shopping? Do you think this will need to remain a key destination point? I think that's, well, probably a question for either of you, but I'd like to put it to Paddy first of all. Paddy, over to you.
Yeah, I think it's probably one of the most common questions I've had in relation to the work. Yes, it has an impact. Yes, it's factored in. I think there's two components really that I talked about that drive West End performance. One of those is footfall. Do I think it will largely impact footfall? No, not really. I think that the destination element and the global pull of London as a global city will still attract people to the West End, and they will still come to visit. I think for certain consumers, it could decrease their propensity to transact, or it could decrease their overall volume of spend in the West End. I think largely you might again be focusing on sort of some of the key streets that are sort of serve the more aspirational consumer, but ultimately don't think it will put people off visiting, but could limit transaction values.
Dee, do you have anything to add to that?
No, I think absolutely. From my perspective, Paddy's hit the nail on the head. I mean, you know, with any forecast of this nature, how long is a piece of string? You know, in terms of this, we're at a pivotal moment. But there's a lot of assumptions built within the work that Paddy and the Colliers team have done. So something that Paddy and I are looking at is potentially a bit of a refresh in around 6 months' time, just to see how we're tracking against some of those key points. And clearly the tax-free, the international shopping, the footfall, etc., are key drivers that we should be reviewing as we get through the next 6 to 12 and further on months' time.
Okay, let's move on to a question from Matt Martin from Capco. How are the estimates for growth in international tourism arrived at? What data is this based on? Paddy?
So we build in estimates from tourism economics, which are part of Oxford Economics. So sort of third-party data sets are sort of blended together to build in those tourism estimates.
And the question here, I don't know whether you went into it, but if you can maybe unpack it a little bit more. They've not given their name, but their question is this: which scenario do you think is the most realistic of the scenarios which you painted? Get your crystal ball out and look deep into it. What would you say?
I'd probably say what Dee said and say how long's a piece of string, but I'll give a more analytical answer. I think probably sort of in the short term, we're in an unusual dynamic where actually it's harder to forecast the short term versus the long term. And actually, I think, you know, looking at, you know, this work is up to the end of December last year, the data that we're looking at, and we've actually, you know, we're sitting on another 2 months worth of data that, you know, we can look at and compare to the work that we've done. And I think that probably is pinning us sort of somewhere between the midpoint to prudent end of the scale. So, you know, with the Omicron variant and so on, and the slower return to the West End. But I think probably, you know, by the time we get to the summer and we move sort of closer to normality, I think the expectations are that longer term, where the scenario is probably the most realistic is either the midpoint or somewhere between the optimistic, where we would probably land, or that's where I sort of pin my hat on.
Okay. The question here, again, from somebody who's remaining anonymous, but we'll still put the question to you, Paddy. Is your prudent forecast take into account increase in inflation, increase in travel costs and national insurance, as well as home costs such as electricity bills?
So again, the data that we get from Oxford Economics around consumer expenditure will take in account things like cost of living and so on. When I talk around sales numbers, that is excluding sort of inflation. So they're sort of the current sort of year's prices. So in terms of consumer behaviour, propensity to spend and disposable income, things like cost of living will be factored into that. But when I talk around any sales numbers here, they're at the current prices.
Okay, question here from Ashley Marison at Tribeca Holdings. You show a strong recovery in performance by 2022 to 2023, but why is the growth flat thereafter for the following years?
It's through a mix of those. Well, I mean, the fast growth is essentially bounce back, whether that be sort of the UK domestic consumer or that international tourism consumer which takes a bit longer, which is why you see the relatively sort of steeper growth between now and sort of 23, 24. Then it kind of switches more to kind of the positive drivers are slightly more outweighed by some of the things that might dampen growth. So the longer term shift to working patterns, for example, will impact or limit growth in worker populations and expenditure. In the sort of the prudent scenario, we fully bake in things like the impact of online expenditure for the UK consumer, which means that actually their average transaction values in the West End will be slightly eroded at that point. So there's different reasons at different points within the projections as to what's driving growth at that point versus the back end of the forecasts.
Just like to bring in Dee here. Dee, in terms of different sectors and the pace of the recovery, many hotels and obviously luxury retailers very much dependent on those international visitors. Do you think we're going to see those sectors recover more slowly?
I think it's very difficult to forecast. However, early shoots are showing it's returning. I think the UK, we've lifted our COVID measures and restrictions come into the country, and actually through conversations we've been having very recently, hotels and travel that we've seen through our other resources is coming back. It might not be coming back spring, but the summer is looking to be very positive, and there's lots of things to be positive about. The Jubilee, etc., should mean that tourism recovers quite strongly through the summer months. We're quite optimistic, in fact.
Okay. Let's go back to you, Paddy. Matt Martin, Capco, I think we've had you already, but we'll give you another chance to ask another question since they're good questions. Does the growth in international spend make any assumptions with regard to the VAT changes, or does it assume that things remain as they are now? And do you believe the West End will be a significant disadvantage to other major retail centres if the rules remain as they are?
So yeah, I mean, going forward, it recognises that there will be some change. Does that put London at a disadvantage? Again, I think it's certain retailers in the more international tourism dominated areas will potentially see some spend diverted. I think for other retailers and international visitors that are probably more aligned to sort of the mass market brands and broader offer of the West End, I don't think there would be as much impact. So I think it depends on the specific occupier, the specific streets, but yeah, ultimately it's one of those levers that impacts average transaction values or propensity to spend. If you take away or put in a barrier that will impact that, there will be some impact will be felt.
Question here from Adam. I'm not sure about the second part of your question, Adam, so I'm just going to ask the first part, if that's okay. Has your research findings yet factored in any impact, good or bad, of e-grocery?
Yeah. So from an online perspective, we factored in continued growth regardless of category. So within Colliers, we build a lot of sort of multi-channel expenditure models that look at what's the split of expenditure for clothing and footwear, or specifically footwear. How does that shift in store versus online. We do that for each and every product category, including grocery, and that modelling is built in behind the scenes in these forecasts. So yes, it's taken into account.
Very topical question here. Do you think the situation that we're facing at the moment internationally, and I'm sure this is referring to the Ukraine, will impact the customers coming from Europe? But what I would like to add on to that is Europe stroke Russia.
I think undoubtedly at the moment, yes. I mean, I think when we see the sanctions and even the ability, the flights and linkages to Russia are stopping. So yes, undoubtedly that would have an impact. And again, some of those very high spending individuals, that will be felt more in some areas within the West End versus others. But yes, it clearly would have an impact.
Question here for Dee. Will New West End Company be complementing this research with any customer insights to get the consumer view on how the district is recovering in real time?
Absolutely, for sure. So we do our quarterly on-street surveys. The last surveys we did were in December, so we got a real feel of the district at Christmas. Our next ones are coming up in the next couple of weeks. So absolutely, anything we do quantitative, we'd like to marry up and pair up with the qualitative data that we get from our customers. So as soon as we have those results, probably in April time, we'll be able to share with members.
Okay, another question here from Rachel. Do you compare to cities such as Paris and Milan in their recovery? And if you do make that comparison, what is the comparison?
So we specifically haven't in this piece of work, but I know pieces of research have been done on that, and I think for the 2021 performance, I think London and the West End footfall was tracking ahead of a number of those other major European markets. So it was a slightly more positive story, is my understanding, but that's not something that we've sort of been commissioned to do in this instance. And
Paddy, can I just ask you, how often will this report be updated? What's the plan for updating it?
So I think the in-depth piece of work that you're seeing here is sort of an annual piece of work, but I think as Dee has mentioned, we will track performance, and I think there'll probably be a light touch update around sort of mid-year to sort of say, well, where are we tracking versus these numbers, and what does that mean? So yeah, it's the data that we sit on is continually collected. So whether it be the MasterCard data, whether it be the mobility data, and so when I talk about mobility data, that's tracking consumer movements through sort of mobile handsets and so on. That's data that Colliers it sits on and always sort of can report on, so it's quite easy to sort of dip into the data and get an update at a given time point. So I think the plan is to sort of look at the numbers in 6 months and refresh fully in 12 and the end of the year.
Okay, this might be a question possibly for Dee. What do you think the impact of the TfL tube strike actions will have in terms of the impact on footfall in key locations?
It's a very good point, and it's not something that I expect Paddy and the Colliers team to have taken account of in their work at all. And from somebody that relies on the tube to get into the West End for work, it's been it's been an absolute nightmare. So we continue to push RMT to call off these strikes. They for sure will hamper, our recovery, particularly in key locations. So we continue to do that, but of course they will have an impact on parts of the West End.
Okay, we're going to have time for a couple of more questions. If you have a question, get in quick and put it there, because otherwise you'll miss out on this opportunity to ask it live to the guests. There's a question here from someone who's remained anonymous, but the question is, how is the level of turnover of sales likely to impact rental levels over the forecast period? Paddy, do you have any views on that question?
Yeah, I mean, so we focus purely on sales here. I think there was a question or a comment earlier around sort of things like inflation and occupancy costs, whether that be staff costs, whether that be margins, whatever. They're all sort of being suppressed, and retailers are not necessarily, you know, just because sales are going up, it doesn't mean that rents will go up. Again, I think, you know, depending on the certain streets and the certain product categories and so on, you won't get a common rents will go up, rents will go down. I think it will be mixed, but I think, you know, if we're at the optimistic end of this scenario, rental levels become more sustainable, and therefore, you know, there's the potential opportunity for growth. I think realistically we're seeing sort of a rebasing or resetting of rents, which will help retailers, and I think, you know, that probably longer term makes retailers more sustainable at that level, so potentially, you know, less limited growth depending on the scenario.
Thank you. Dee, I suspect this is going to be the last question. I'm going to put it to you. You kind of touched on the Elizabeth line and the impact that will have. Can you just unpack a bit more just how much of a difference you expect that to make to the West End?
Don't do this to me. The Elizabeth line, I thought I'd got away with it. So we are expecting the Elizabeth line, or certainly the first half, to open the first half of this year. We haven't had revised numbers yet from TfL and what that might look like, but certainly going back, you know, 3 or 4 years ago when they released their customer numbers, we were looking at 60 million or something additional visitors to the West End. Now clearly that will need to be revisited and re-looked at. But we, you know, this is going to be a massive opportunity for us to reap the benefits of that investment and get people into the West End that perhaps haven't been for a very long time, or make lives a lot easier for people to get into the West End. So we're certainly looking forward to it, first half of this year. And again, we will keep a fine eye and make sure that Paddy and the team include any upside, fingers crossed, in the forecast that we release later on this year.
Thank you for that, and thank you to both our speakers for joining us today, and to all those who tuned in and asked questions. For any follow-up questions regarding the report discussed today, please do reach out to Art Jong or Lucy from the New West End Company. Thank you for joining us over the last 2 years. It's gone very, very quickly, scarily quickly. We look forward, though, to welcoming you to another webinar soon. Until then, take care. Goodbye.